It's 10 a.m. here in Lagos. Good morning and welcome to Business Morning. Happy holidays to our viewers. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for joining us. A UK-based company, Aurelia Mining Company Limited, is seeking to invest up to $50 million in exploration of gold in Nigeria. According to the company director, Mr. Julian Hammond, the firm plans to begin exploration activities in 6 months after completing all the necessary legal requirements by the government.
While receiving the delegation from the company, the Minister of Mines and Steel Development, Mr. Olamilekan Adebite, says the ministry is also seeking to tackle the challenge of leakages in the sector occasioned by activities of illegal miners. Let's take a listen.
We've been received with open arms, we've been received with encouragement, and it gives us confidence to go back to the United Kingdom, and I'll be going to Canada soon, and talk to our investors and say the place to invest in the mineral industry in Western Africa is Nigeria. Right now we're carrying on an assessment of the project. What I envision is initially when we start there's going to be a smaller investment of $5 to $10 million, but as we begin the full mining operations, and if the deposit is as big as we hope it's going to be, you're going to be talking about costs of $50 to $100 million over a period of 10 years to 15 years.
We're in London, and this particular group, we met them during one of our outings in London. We presented the data, and of course, we told them to come to Nigeria. So it's a happy day today that they're here, and the project is a reality. We look forward to greater things from this. Yes, leakage covers, part of that is the illegal mining, and it transcends the ministry. We're working with other agencies, government departments, and ministries as well, so that we can overcome all these leakages. There's leakage at the port, those who export illegally without paying the royalty that is due. We have people who mine illegally and all that. So it's a multifaceted problem. And we're cooperating with other agencies, especially the security agencies, to make sure that we reduce it as much as possible. It's almost impossible to eliminate it, but at least we can keep it to the barest minimum.
And to the oil market now. Oil prices stabilized today after slumping around 7% in the previous session amid a broader market retreat led by concerns about a resurgence of COVID-19 infection, which came just as producers inked a new supply deal. Brent crude gained 38 cents to $69 a barrel. The U.S. crude contract for August delivery, which expires later on Tuesday, was up 49 cents at $66.91 a barrel. U.S. crude for September delivery was up around 1% at $66.99 a barrel.
And the sell-off, which pushed prices to their lowest in 2 months, was largely due to concerns centered on the Delta variant and macro backdrop rather than a significant rethink of forward-looking oil fundamentals. It came after the Organization of the Petroleum Exporting Countries and Allies, called OPEC Plus, reached a compromise on Sunday to increase output.
Now, for more on the oil market developments and other developments on the commodities market space, Desola Simoni, research analyst with Financial Derivatives Company, joins us next. Do stay with us. This is Business Morning.
For more on the commodities market now, we're being joined by Desola Simoni, one of the research analysts with Financial Derivatives Company. Hello, Desola. Good morning. Thank you for joining us. It's a holiday here today. I know you're in the UK. You are not observing any holiday.
Hi, Chimeze. Thank you for having me. Today is just another hot summer day. No holidays here at all.
I know. All right. So we're talking about oil. That's the hot story at the moment. OPEC Plus have agreed to increase oil production by 2 million barrels per day starting August till December 2021, prompting a slide in global oil prices. In fact, Brent is currently below $70 for the first time in more than a month. I mean, aside from this OPEC Plus pact, what are the factors are you seeing there driving oil prices at the moment? And where do you see oil prices going forward?
Thank you for that question, Chimeze. So like you mentioned, the OPEC pact, which was agreed on over the weekend, to increase production by about 400,000 barrels a day from August up until September, bringing the cumulative to around 2 million barrels per day is one of the factors. But we're also seeing rising coronavirus cases in key economies. We're seeing rising coronavirus cases in Europe and in Asia. For example, in the UK here, over the weekend, I think we saw on Saturday or Sunday, we saw one of the highest rates of new coronavirus cases in a day, around 50,000 or 52,000 new infections in one day. So this kind of rise in infections, particularly the Delta variant, is stoking concerns that there may be some, reimposition of some new restrictions, which may, slow down the pace of economic recovery and slow down oil demand growth. Also, we are seeing a stronger dollar. Usually when the dollar strengthens against a basket of other currencies, we see that commodities denominated in US dollar are less attractive to holders of these other currencies. So these factors are what is contributing to the slide in oil prices. But I think myself and other analysts, we are a little bit confident that because of the vaccination is going at pace, we think that oil demand will be a little bit resilient, and we expect that even though we are expecting more oil from OPEC coming on the market, we still feel that the market will be undersupplied in the near to medium term and prices will remain elevated.
Okay, well, but higher global oil prices is lifting U.S. gas prices, which is driving U.S. inflation. As a matter of fact, U.S. inflation for June spiked to 5.4%, the highest since August 2008. What is the implication, of this for the U.S. Monetary policy, and how will this affect emerging and frontier markets, such as Nigeria?
I think the biggest concern for the US and for us, for emerging market economies and frontier markets, is this shift in monetary policy stance. So the US Fed and President Biden is trying to assure the Americans that inflation is still anchored at 2%, long-term inflation is still anchored at 2%, and that the inflation we are seeing currently is transitory. If you look at the key driver of inflation, it was mainly used car market. So interestingly, something happened in the height of the pandemic. Many of the used cars retailers and dealers, they sold a lot of their fleet, and as demand came roaring back, they were struggling to restock on their fleet, and that drove prices through the roof. I mean, some cars, the used version is even more expensive than the new version of the car. So the U.S. Fed and President Biden have the view that this inflation is transitory and it will taper down towards the end of the year. But the key question is, if inflation does not remain anchored at 2%, if businesses and individuals expect that inflation would perpetually increase, then that would change inflation expectation, and that would lead to long-run inflation, and that would then affect U.S. monetary policy. Currently, the U.S. Fed has signaled that they do not expect to change their monetary policy stance until at least 2023. But if there's a shift in long-run inflation expectations, then we may see a sooner change in their monetary policy stance. And that has implications for us, because once the U.S. increases their benchmark interest rates, then we'll see capital flights from emerging markets and frontier markets, and that will put pressure on Nigeria's exchange rates and current account balance.
Yeah, so having seen OPEC ease in production quotas, Nigeria's oil production quota has increased from 1.4 million barrels per day to about 1.8 million barrels per day. Well, that will start in August. So what is the implication of this development for Nigeria's government revenue?
I mean, given that Nigeria's government revenues are more production sensitive, I mean, oil production sensitive compared to price sensitive, I think it is positive in the sense that Nigeria's production has increased, like you mentioned, from a 1.4 million production quota has been increased from 1.4 million barrels per day to about 1.83 million barrels per day. So that's like a 30% increase, and the reduction in price is quite small. So that means that Nigeria's export revenue would increase. It means that FAC allocation would increase. It means that also higher oil prices and higher production is also positive for Nigeria's external sector balance, particularly in terms of balance of trade. It also means that we'll see more accretion to the external reserves, and it will ease some pressure on the exchange rates.
Now, you had said before that you see an elevated oil prices. At what level do you see the oil price settling eventually? I mean, some have called for $100, some are saying 85, and well, as yesterday we saw oil price come down as low as 68. For you, where do you see oil price settling eventually?
That's a tough question, Chimeze, and we know that oil prices are quite volatile, right? And so it's quite difficult to put a number. But I think I said we expect oil prices to remain elevated, somewhere between $60 to $70 per barrel in the near term, at least.
Okay. All right. Well, speaking of Nigeria's government revenue, the FGN has increased Nigeria's borrowing constraints from 25% of GDP to 40%. What are your thoughts on this development?
When I saw this news, two questions came to mind. One is it's not surprising first because of Nigeria has a low revenue base, and every year, as I can remember, we've always had a budget deficit. So Nigeria has a low revenue base, and every year we keep increasing revenue, we keep increasing expenditure. So obviously we always run a budget deficit. As of last year or this year was about 5.4% of GDP, the budget deficit. Now we need to find ways to finance the budget deficit, right? And one of the ways we come across is borrowing. So increasing the borrowing limit, I think that if the borrowing itself, I mean, we've had this discussion before, largely. Borrowing itself is not the problem. It's if it is not purposeful, then that is the issue. If we are borrowing to build roads, to build railways, to build airports, to build infrastructure, then that has a multiplier effect on the economy to produce jobs and can boost economic growth. But if you are borrowing for recurrent expenditure, then that is an issue. Then the next question that comes to mind is, what about the sustainability of the public debt? Currently, we push our numbers. Our debt to GDP ratio is very low, and maybe like 13 or 19%. I don't remember the exact figure. But when you look at other ratios, such as debt service to revenue ratio, depending on who you ask, is somewhere between 70 to 90%. And that just tells you that for every 1 naira that Nigeria earns, they spend 70 to 90, kobo, to service their debt. So that is the issue. And increasing borrowing constraints means, yes, you can borrow some more. If purposeful, we can then use it to, if the borrowing is purposeful, then we can use it to, implement some projects, some infrastructural projects, some capital projects, which is positive. But also we need to keep an eye on the sustainability of our borrowing, so that we don't become a highly indebted country. I think the key issue is the sustainability of the borrowing.
All right, let's look at other issues out there as a burning economic issue. Now, the Central Bank of Nigeria has restricted sugar importation to Dangote, Bua, and FMN, citing that these firms have made significant progress in backward integration. Now, isn't this encouraging monopoly in the system, which a lot of people believe is a disincentive to investment?
Yes, so essentially this focusing on these three firms, these are the largest firms anyway, so it's kind of in economics call it an oligopoly, which is a market structure where we have a few firms dominating the market. So these are the few biggest firms, and they are really dominating the market. I think that it's like you said, it would discourage, to discourage competition, because these guys can come together and start, colluding and setting prices, and because of they're the largest producers, they can effectively dictate prices, and that is a problem on its own. But because if you look at these guys' investment, they made some huge investment actually in sugar farms across Nigeria, and I think that's possibly why central bank is trying to encourage them. But on the other hand, I think it's not positive for competition, and you may see higher sugar prices going forward.
All right, but on a similar note, the FGN has approved a 6.15 billion naira subsidy for the first batch of 1.2 million farmers. What is the implication of this development on the agric sector?
Okay, so in theory, in principle, this is positive, right? It's this agricultural subsidy or cash transfers. It's positive in the sense that it can support adoption of agricultural technologies. It can increase the standard of living of the farmers. It can help boost domestic commodities production, which can, increase outputs in the domestic economy, and also support, the move towards what's it called now, self-sufficiency, domestic production in Nigeria, and it can also help reduce food prices. So in theory, it is good, but in practice, a lot of questions come to mind. And the effectiveness, I think, of this agri subsidy will depend on how it is designed, how it is implemented. Who are the farmers that are getting these monies, and is it monitored? I think that's my biggest question, because we've had some programs like this before. We have the Anchor Borrowers program, for instance. How is this one different from the Anchor Borrowers program? We don't have the details, so I do not know how it is different. But I think the key issue here is monitoring. How are they monitoring the people the farmers that they give this money to? Because for me as a researcher, I am dying to evaluate the effect of some of these, policies, some of these, Anchor Borrowers program, for instance. We just hear, the central bank has injected this billion naira, that billion naira. What is the output? Is it achieving its intended purpose? We do not know that. So I think that's the key issue: monitoring and evaluation of these policies. If they're actually working, if they're working, fine, let's encourage them. But if they are not working, let us scrap them and move on to other things. I think that's the key issue.
Anyway, interestingly, we will be speaking to someone in the industry, a farmer, to tell us if she has benefited, from some of these programs that the government have been putting out in the agri sector. But before we let you go, Desola, talk us through price developments in the domestic commodities market. Of course, we'll see our Muslim brothers are celebrating today. A lot of activities out there. And of course, we expect that most of these commodities might probably spike. How might the current headline inflation rate of 17.75% factor into, of course, the MPC decisions next week?
Wow, that's like 3 or 4 questions in one. Anyway, so if you look at the slides, Chimeze, and you'll see that almost all the commodities are red and pointing upwards. So we are seeing a sharp increase in the price of most domestic commodities. For instance, if you look at tomatoes, price of tomatoes have jumped 140% for a 50 kg bag, 50 kg basket, I beg your pardon, to 60,000 naira. The price of sugar has also jumped 21% to 22,950. We also have peppers, which have jumped 17%. Part of it is, extra demand coming from the Muslim festivities. I mean, Nigeria, about 51% of the population is Muslim. So imagine all of that demand hitting the market at once. Yeah, that's possibly why we are seeing the jump in prices. But also, we are seeing the rise in insecurity. I mean, it is now very difficult or costly to bring some of these products, some of these commodities that are grown in the north or the middle belt down to the south. And that's also part of why we are seeing this spike in prices. Regarding inflation, for the past 3 months now, surprisingly, inflation has been trending downwards, currently 17.7%, like you mentioned, but it still remains elevated. And I think it's one of the critical considerations for the central bank at the Monetary Policy Committee meeting next week. But in addition to that, there are also many other issues that they need to consider: the economic, the growth and unemployment rates, the exchange rate, and many other issues. So I think that all of these issues are going to be factored in together, and not just inflation. But inflation, I think, is giving some support, at least, that there's no urgent need to increase the benchmark interest rate as other African countries are doing at the moment.
We'll see how that goes, Desola. All right. Thank you very much for your time.
Thank you for having me.
We'll take a break, and when we come back, we'll look at the agri sector and the drivers of food inflation in the country. This is Business Morning. Keep it here with us. The National Bureau of Statistics in its June inflation data reported a year-on-year decline on food inflation from 22.28% in May to 21.83% in June. With the continuing insecurity challenges that have continued to threaten farmers and the issue of flooding, many say these data may not match the reality on ground. Well, Nigerian farmers recently warned that the country may return to food importation to augment what the country currently produces if the issue of insecurity persists. Mrs. Edobong Akpabio is a farmer and the current chairperson of the Agri Group of the LCCI. She joins us now. Thank you very much for joining us, Mr. Abiu.
Good morning.
Great to have you.
Happy
Good morning
holidays.
and happy holidays.
Thank you so much.
Well, farmers don't rest anyway.
At all.
Farmers don't go on holidays because you have to feed the nation.
Yeah.
Now, tell us, you are a farmer. Can you paint a picture of what food production is like for you at this time?
It's like 2 steps forward,
3 steps backwards.
5 steps
Five.
backward.
Oh, wow.
Okay, that's even bigger.
So we're trying so hard, to be able to cover for all the gaps that have popped up in the past 5 to 6 years. And it's looking like we have a lot of, drawbacks, something keeps pulling the carpet from under our feet. We've been struggling with the security situation. And for every farmer that is attacked, that is killed, injured, we have 5-10 farmers who do not go back to the farm. So there's fear. So that means that fewer farmers are producing. So few food out there. Then we have issues of the innovations that we can tap into to make production more efficient and more effective. And that has to do with elements like irrigation and all of that. So we don't have to wait for the rain before we can farm.
Yeah.
But now we have the rain and it is a flood.
Yeah.
So, we're pushing and it's pulling. We're pushing and it's pulling.
Okay, but still looking at this, insecurity issue, what do you think, the government can do now to make farmers more comfortable and not so fearful?
It's just to handle the criminals. That is what we expect government to do. The reason why we can go about our normal business is because we know we are safe. And the government has a responsibility to keep us safe. Otherwise, we will take our decisions regarding our safety, and it's affecting.
And how can farmers protect themselves?
We are trying to do that because we discovered that we were not getting the kind of help we required from the government, maybe because they are overwhelmed. And we began to farm in clusters, and that's why you're still seeing farming, actually. So we believe that, down south here, they can't really compact like 100 people, in the farms like that, and nobody will know. So when you're a lot in a particular location, you really feel safer.
Feel secure.
So people are farming now in a lot more clusters. But it's difficult in the rural areas because you don't have your farms in the same place. So this is what we are redesigning, where you can have like 100 acres and then you can have like 50, 60 farmers work there. So they feel safe rather than them being in their different small, farms and alone. Where they are, become pickings for these criminals. Yeah. But that's just what some of the things we are doing. We can't tell farmers to carry guns. Their cutlasses probably also will not help. So we are trying to see what we can do to just ensure that we are still running our businesses.
Sure. All right, let's look at some of the incentives that the government have tried. The major one, we know about the anchor borrowers that the central bank have been, rolling out. And a few months ago, we talked about releasing some grains, from the strategic reserves, to farmers. And, of course, recently we just heard that they're talking about subsidy. In fact, about 6.15 billion naira of subsidy has been approved for the first batch of farmers. When we talked to our first guest, some of the questions he raises: who are these farmers?
Receiving these
How
funds,
are these initiatives impacting on these farmers? Those are the questions that, for him as a researcher, he would really want to know. So, you are a farmer. How are these coming up with you guys?
The CBN has been super supportive, I must say. But for the CBN, I really do not know if we would have had any food now. The Anchor Borrowers scheme was a great one because it helped to actually boost the production of cash crops, especially rice. We now know, as a result of that funding, that we can produce rice. So it's been a great effort on their part. Now we have this subsidy. We get to hear that we have for 1.2 million farmers, 2 million farmers. You know, media tell us some of these things, and it's music to our ears. But just like the former guest mentioned, we are interested in how are you compiling the list of these farmers.
Okay.
You know, we want to be able to see transparency. We want to be able to see openness. And I think it's high time. If you can tell the number of filling stations we have in the country, you should be able to tell the number of farmers you have.
Absolutely.
So there should be maybe a central portal that people can go log in. Now it's easy. Technology is here. So you can give the coordinates of your farm. You can actually go register. You can produce all of that. That is some of the things that Nestle did when they came in with the microfinance bank and they were providing financial support to farmers. They will ask you for the coordinates of your farm and they will come visit the farm. They don't even need you to be there because they know where they are going. So we can explore that. So we can have some openness and transparency. And one of the issues that bother us a lot is the monitoring and evaluation. You have a lot of all these initiatives, you have a lot of all these schemes, but nobody tells us what's the outcome. What was even the objective? Besides helping farmers, what was the objective? We want to know so we can match it, with what came up.
I know if it was
and
actually
then
met.
let's get everyone on board. We have risks. This flood is a risk. And if you're, and look at it this way, farmers is not all about planting. There are livestock farmers. They also are going to be beneficiaries of all of these schemes and initiatives. We need to be able to, build our risk assessment so we can also have objectives for these schemes. We look at all the risks and then we look at all the outcomes. Otherwise, we just keep seeing figures in the media and it doesn't translate to anything.
Yes, I'm talking about flooding. The rainy season is here. How are you farmers, handling the floods?
It's part of the risk of the business. Number one, how did you set up your farm? Because if you are on a floodplain, it's rather silly to come crying that flood will come, and then we also look at that, and then we look at insurance. We need to embrace insurance. We need to look at ourselves as business people and have these risks that we cannot manage and have those who manage those risks to come, work with us. We've been shying away from insurance because, we don't believe in insurance. God is our insurance. They don't pay claims. We've heard all of that.
Right.
But let's be very serious with ourselves. This is business. And that's what insurance companies are here to do. So when we embrace them, we reduce our risk. When we do what we need to do in what we know how to do, I don't, like I said, if I'm going to go and plant on a floodplain or you build your, you are really
well, but you are saying this, but we know that when we talk about farmers, when we talk about farming, you think about peasants. You find out that perhaps those in the villages are the ones farming is meant for. Yeah, but seeing someone like you and well-educated, you are in advocacy group. How do you ensure that even those so-called peasants, because they seem to be the ones who are doing most of the farming,
majority.
Commercial farming doesn't seem to be that so big here. So how do you coordinate all of this?
Yeah, Chimezi, I think one of the things we need to do is change the impression we have. Whether you like it or not, the farms are in the villages. But not everyone, farms like a villager. So we need to change that impression. Our town planning laws do not put farms in the urban center. They put them in the rural areas. So if I have a farm, I would have it in the rural area. But we call them smallholder farmers. We don't call them peasant farmers. That was a colonial title, and we don't want to work with that. We call them smallholder farmers. Essentially because what makes them that peasant that you say is because their farmlands are small. And most of the time they are farming subsistence to eat, to have something to eat. So when they have a surplus, they can now sell, to obtain other products. Now the government, states and federal, trying to encourage them to come in groups, cooperatives, form cooperatives, so you can actually know who they are and you can work with them. If you go to villages, you can ask the village heads, they can tell you the farmers and put them into groups for you to work with. And what are we trying to do? Like you rightly said, they actually, I mean, when you aggregate them, they actually produce the much food we are having right now. But we are saying we can increase their productivity. On that same land, they've been farming for like centuries. They have not been doing it well. So their yield still comes out very low. When, I mean, the same efforts, the same resources, low yield, they could do better and get better yield. So that is what we're trying to do with them. But commercial farmers are here. Let me tell you that. Commercial farmers are here, and they are doing very well. They are actually producing, because all these risk factors we're talking about, they have already provided for them. So when we have, like this case of flooding, you won't hear much commercial farmers complaining about this flooding because they have already taken care of it. Yeah. So it's actually their food products that you have, that you're eating. When the smallholder farmers suffer, you know, all these consequences of this bad weather and all of that. So they are working in groups. You have a lot of them. We have a lot of organizations working with them, trying to get them good education, get them good inputs, you know, and provide them with extension services that provide advice for them to be able to do better. So a lot of them are doing better now.
Okay. Before we let you go there, I'm sure you have seen the latest figures from the National Bureau of Statistics, telling us, of course, how the inflation has been coming down, particularly, I mean, we're talking about food inflation now. And but when we go out there into the market, what we're seeing seems to be different.
A different story.
I mean, from the farmer's point of view, where is this decline coming from?
Yeah.
Whenever you see forex rates go up, it affects the cost of inputs. That's the first thing you need to say. So NBS has a whole lot of, you know, elements it's looking at to be able to give us their own view about the economy. But the direct hit for us is the FX. When it goes up, it affects our inputs. And when it affects our inputs, it will affect our output. So much as we are working so hard to ensure that this is what happens, we want to meet with the NBS statistics, but a whole lot goes on behind the scenes, you know, that doesn't deliver on all of that. It's just economics, really.
Simple economics.
So what does the rest of the year hold for us in terms of
food security?
Security, of course.
We need the security situation to improve, because this is the peak of the planting season. So we have a lot of people who cannot plant, and that is really, really sad. We haven't recovered from the COVID-19 pandemic, you know. Yeah. A lot of farms shut down after the COVID, and they haven't been able to come up. So already there is COVID wala, there is security, which we are battling. Too. And now a new variant coming up. So those are some of the things that we want to be able to overcome. We need to overcome that to be able to move on. And then we need a lot of support to improve our productivity in terms of technologies for irrigation, for climate-smart agriculture. We're beginning to talk about climate-smart agriculture because whether we like it or not, climate change is here.
Yes. Oh, yes.
So these adverse weather situations are affecting us. So if it's not flooding, it's excessive heat and all of that, like we had last year. Rain stopped in some parts of the country from like June. I'm talking about the south. June, which is actually the rainy, and came back in September. I don't know whether you can imagine what happened to the farms then. And then we're hearing flooding in the north.
Yeah.
You know, cleared out
Extreme
a lot of
weather.
farmlands. It was sorry. So we need support in those areas. We need extension services back, you know, in agriculture to support the efforts of the farmers.
Okay, let's just hope we get there, and so we don't go hungry.
Get it right. Because,
thank you very much, Mr. Edovong Akpabio. We do appreciate your time.
Thank you, Chimeze. Thank you so much.
Okay, let's do our opening call now. Well, the market is closed today, but of course the equities market started the week trading with mixed sentiment ahead of this two-day holiday. Anita, tell us more.
Yeah, and happy holidays. In as much as we are on duty, all the rest of the market, the financial markets, they're in Nigeria, they're on holiday. But yesterday, to bring you up to speed with what's how the market closed with, it picked up from Friday's flattish close, almost the same margin, 0.1%. You might call it a flat close, but we gained 2.85 billion naira yesterday. Of course, we also had a positive market breadth of 22 gainers against 9 losers. Total volume also was higher by 73.5%. Of course, when you take a look at the sectoral performance, it was the banking sector counter that made a major drag on the market. All the sectors were positive. And then, of course, like I rightly mentioned, volume of transactions, in contrast to Friday's closing, was higher by more than 73%. Okay, so now to bring us, to give us some more information on this subdued, this closing market, the market's performance for Monday, let's talk to Mohammed Kaide, who is the head of dealings at APT Securities and Funds. Thank you for joining us, Mohammed. Hello, Mohammed, can you hear me?
Yes, I can hear you. Good morning.
Okay, yeah.
It's a pleasure to be here with you.
Okay. So now, the equities market, it is still being subdued. Of course, if you take a look at it, it's just been marginal gains from last week, then of course also starting this week. So now, with the markets closed, and yesterday we had the news of Oando settling its 2-year dispute with the Securities and Exchange Commission over corporate governance issue. And of course, its share price at close has remained unchanged at 3929 copper. What do you expect? How do you expect this? What's your expectation for this stock when the market resumes?
Okay, thank you very much. It's a pleasure to be here with you. What happened in the market yesterday shows that there is serious abysmal performance in the market as regards to the volume and value traded in the market. You see, where market traded 1.1 billion. This is abysmally low to what we used to witness in the market. Now, I'm talking about Oando. Oando issue started as far back as 2017 when two major shareholders petitioned SEC about some issue on Oando. Then the Securities and Exchange Commission in 2019 concluded their forensic audit, and they came up with some of the infraction, so-called infraction by SEC, that they said Oando did during the market. As you rightly said, it has to do with corporate governance issues, misinformation about the financial statement of the company, and so many infractions that SEC claimed that they have done within that period of time. So at the end of the day, it was, we have it, if you look at what SEC came up with, they have two issues. The first issue is that they are going to suspend the management of the Oando, especially the Wale Tinubu and his deputy for 5 years. But at the end of the day, they are finally settled for the company to be able to pay all the fines that SEC wants them to pay. But they will waive that suspension of the MD and the deputy MD. So this is showing that there is resilience in companies that are listed in the market as regards to some news and the way they manage some of those negatives around them, negative news around them. The information came to the market late yesterday. I didn't mean that the information came before the market closed. You will have seen market and the share of Oando to have gained almost 10%. So with this resolution, with this agreement now, what we expect that going forward about the stock, we expect the market to continue to go up, and the share price of Oando to continue to go up. So we implore the investors to quickly come in and take their position, and whatever position they take, we should expect that market should move higher than this current price that is trading in the market.
Okay. Okay, so thank you for giving us that piece of information, Mohammed. Okay, so that was Mohammed. That was Mohammed Kaide, who is the head of dealings at APT Securities and Funds Limited. So now, Chimi, I would have given you more information about the other markets. They were also not too much of activity there, especially at the fixed income markets, treasury bills, of course, they are at 8.67% down, and they're thinking maybe they might, investors are switching to the equities market. But I don't know what your own guess is.
Well, I was listening to Kayode there talking about Oando. So we look out for how the shares of Oando will, of course, react to that piece of news when market resumes on Thursday. For now, we'll take a quick break. When we come back, we'll do an opening call to London. Okay, let's see what's happening in London at the moment. Good morning, Juliana. Global markets tumbled yesterday as investors fret about Delta variant spread. It's a new day today after the Freedom Day. What are the sentiments like this morning?
Good morning, Chimiza. Yes, it's the day after, the day before, and yeah, there was a little bit of a rocky start to the opening proceedings of the FTSE yesterday, which was a little bit of a shameful embarrassment for the Prime Minister because there had been so much pent-up anxiety and expectation to Freedom Day, and then all of a sudden, three of the most important political figures in Britain were self-isolating, of course, as well. Last night, we then got a little bit of breaking news from the Prime Minister reversing his stance on nightclubs. So in September, you are going to have to show that you've been double vaccinated to get into a nightclub and other venues. I think that appears to have calmed investors in London this morning because we're opening on a positive start. Miners are the ones who are leading the blue chips, Anglo-American, BHP. They're all trading up by about 2.5%. So there's calm, but I think the anxiety for investors within the square mile is, as the economy opens, is it actually more riskier than it was this time last week? That's the big question. We'll just have to wait and see.
And there are indications that the government plans to strip National Grid of its role of keeping Great Britain's light on. National Grid has played this role in managing Great Britain's energy system for more than 30 years. So why this reform now?
Well, according to Kwasi Kwarteng, the business secretary, and to be honest, most people in Whitehall, this is part of a strategy, of course, Britain are marching ahead to make sure by 2050 there are going to be net zero emissions emitted from gas or electricity. And they need to look at government institutions or governing institutions that are providing crucial electricity and gas supplies. And National Grid, as you said, have been the backbone for providing electricity in this country for several decades, but now following a consultation also by Ofgem, who is the energy regulator, they've suggested to the government that perhaps an independent body is much better placed than a private company trading on the FTSE. The government agree, although National Grid will still have a crucial part to play in providing electricity and potentially gas for British homes. As you know, we're seeing electricity supplies getting greater, particularly as we're shifting away from petrol and diesel cars to electric and hybrid cars. The government feel that there needs to be another body in place to conduct that. So this won't be happening overnight, but certainly the discussion has already taken place, and National Grid are well prepared for that.
All right, we'll get more updates from you later in the day. Thank you.
Thank you. Thanks, Jimmy.
All right, let's look at crypto now. Ladi, nearly $100 billion wiped off crypto market as Bitcoin drops below $30,000.
Yep.
That's not good at all.
It's not looking good. Today is actually a massively red day in the crypto market. The bulls have tried to defend that 30K region for a while now, but the bears have succeeded in breaking the 30K region down to about $29,838. And major altcoins are down 2 digits this morning. We see Ethereum down 6%. Major altcoins all down. The stable coins actually in the green, showing you that investors are running into the stable coins. And we do have that Grayscale massive Bitcoin unlock coming tomorrow. So that will also impact the market. We have a $1.19 trillion traded this morning. The market cap down about 7.62%. broken way past the $2 trillion mark for the crypto market cap. 24-hour volume propped up there at 32% at $64.93 billion. Volume is still being sapped away from the crypto market. Bitcoin dominance, 46.59% this morning. We see 24-hour volume traded in Bitcoin this morning, $23.62 billion. Let's bring in Solomon Amunde now to bring us up to speed. Hello, Solomon.
Yeah, good morning, Larry.
Good morning, Solomon. Great to have you. So, institutional investor appetite in Bitcoin, is going drastically down. Seems it's only retail investors holding up the market now.
We've been seeing institutional investors
Hello, Solomon. Solomon, can you hear me?
Yes, I can hear you. Can you hear me?
Okay, I can hear you now. You can talk now.
Okay. Over the past 2 to 3 weeks, that's because investors were expecting Grayscale to sell out almost 20,000 bitcoins, which they did between yesterday and today. They have released over 20,000 bitcoins, and the prediction was that this would drastically make the market drop. So most of the institutional investors are looking at getting into purchasing bitcoin and $28,000. And so far, so good. We've been able to get down to as low as $29,000. So we should start seeing gradual buying orders at this point, and we'll see massive buy orders at 27,000 should we get below that.
So is this the drop that takes Bitcoin to about 15K?
No. I doubt we would ever see a drop below $24,000. We have massive buy orders and massive fundamentals at $24,000. And that was like that's the strongest support we have between 20,000 and 30,000. The strongest is at 24,000. So if we should break 24,000, it might drop badly to $16,000, which I doubt.
Okay. But, most traders are down about 50% in their crypto portfolios. How low can it go?
Yeah, I wouldn't really say traders are down, except for the traders that started investing January this year. Then they should be down about 10-20%, because earlier this year it was about $31,000 to $35,000. But we can't go below 24,000. So far, so good. With the chart, the way the chart is looking, the fundamentals, and also the technical analysis, we can't go below 24,000. And since we have seen the massive sellouts from Grayscale, which is over 20,000 Bitcoin, the market is still holding 29,000. So I don't see us going below $24,000.
Okay. All right. I guess it's time for diamond hands. All right, Solomon. Thank you so much.
All right.
Jimmy, I don't know,
when you say diamond hands, okay, perhaps people that could just buy the dip, is that what you mean?
Well, those that can hold through losses, massive loss.
Well, it only takes a lion heart to actually,
and diamond hands that cannot break.
Do that. Anyway, we'll continue to track this market. It's an interesting market, by the way.
Oh,
but,
yes.
when it's going down, it's so annoying.
It goes hard. It goes down really hard.
To when we'll see those numbers rising again. Okay, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago, and happy holiday to you.
And I'm Ladi Williams. Don't forget to join us on Business Incorporated at 1:30 for more business development around the continent. Thank you so much for watching. I'm Ladi Williams.